One AI company.
Welcome to another episode of Xplained, brought to you by NewsX. My name is Vineet Malhotra. In the latest market sell-off driven by fears of AI disruption, global software stocks have shed massive value. The S&P 500 Software and Services Index alone has erased nearly $2 trillion in market capitalization from its peak, with the software sector leading the decline. And look at the individual names. The Altation down at nearly 47% from recent highs, Intuit down about 40%, Workday down roughly 33%, Salesforce down close to 30%, and Adobe down approximately 25%. This is not routine volatility, this is repricing now coming to India. In just one session, Frontline, IT names saw sharp cuts. Infosys down nearly 5.9%, Tata Consultancy, TCS down around 5.8%, Coforge fell about 6.6%, Tech Mahindra slipped roughly 6.4%, while HCL Technologies, Mphasis and Wipro were down in the 4 to 5% range. Put together, analysts estimate that nearly 2 lakh crore, that's over $24 billion in market capitalization, has been wiped out from India's top IT firms amidst the AI-linked selling pressure. Markets are reacting not to numbers but to expectations. And right now the expectation is clear. Artificial intelligence may be reshaping the economics of software itself. And adding another layer to this market narrative is the increasingly sharp public critique coming from Elon Musk, who has taken to social media to launch a direct attack on Anthropic and its AI models. In a post responding to Anthropic's recent $30 billion funding round, at an eye-watering $380 billion valuation, Musk accused the company's Claude AI of being misanthropic and evil, arguing without evidence that the model is biased against certain demographic groups and even hates heterosexuals and men. His comments have ignited a wider public debate over not just the commercial rivalry between XAI and Cloud, but the ethical and societal implications of how these systems are built and deployed. Anthropic is an artificial intelligence research and product company founded in 2021. It focuses on building what it calls constitutional AI, which is large language models designed to be safer, more controllable, and aligned with human values. It is the company behind the Claude family of AI models. Its flagship chatbot, Claude, competes directly with enterprise AI systems like ChatGPT. But unlike consumer-facing hype cycles, Anthropic has aggressively positioned itself as an enterprise AI infrastructure company. It provides large language model APIs, enterprise AI co-pilots, custom AI integrations for businesses, secure AI deployments for regulated industries, and here's the key point: its revenue has been scaling rapidly, driven by enterprise demand. Anthropic was founded by siblings Dario Amodi and Daniela Amodi, both the former executives at OpenAI. Dario previously served as vice president of research at OpenAI. The founding team left citing differences in governance structure and safety priorities, and since its founding, Anthropic has raised billions in funding from major technology players including Amazon, Google, and this backing has given it enormous cloud computing muscle and distribution leverage. So this is not a fringe startup, this is a capital-heavy, strategically backed AI infrastructure company. Now let's get to the heart of the matter. Why are traditional IT services and software stocks reacting? Because AI is beginning to automate what IT services firm traditionally charged for. Think about it. Custom software documentation, code generation, testing and debugging, data analysis, internal enterprise support tools. These are core revenue lines for large IT outsourcing companies. If enterprise AI models like Claude can generate production-grade code, assist in debugging, automate customer support, reduce the need for large development teams, then margins in traditional IT services could compress. Investors are forward-looking. Markets price future disruption before it fully materializes, and that explains the stock volatility. Now let's slow this down. Is Anthropic replacing software companies? Is the big question. Well, not exactly. What AI companies like Anthropic are doing is shifting the software stack. Earlier model, Enterprise hires IT services firm deploys engineers, builds custom solutions, long billing cycles. The new model that's emerging, enterprise integrates AI APIs, builds faster, reduces manpower costs, compresses project timelines. This doesn't eliminate software companies overnight, but it does force transformation. IT companies must now integrate AI into their offerings, upskill their workforce, move from manpower-driven billing to value-driven billing, develop proprietary AI solutions, in short, adapt or lose margin. What makes Anthropic's growth significant is enterprise-grade adoption. Unlike consumer AI tools, enterprise AI must meet data privacy compliance, security standards, regulatory audits, custom integration requirements. Anthropic has aggressively positioned the cloud as enterprise-ready, especially through cloud partnerships with Amazon and Google. This allows companies to deploy AI within controlled infrastructure environments. That's a big deal, because once AI becomes embedded inside enterprise workflows, it stops being a novelty and becomes infrastructure, and infrastructure shifts markets. We are moving from software as a service to AI as a service. Earlier, companies bought software tools. Now they are buying intelligence layers that sit on top of everything. The question is not whether AI will replace software. The real question is, will AI become the new software layer? And if that happens, companies like Anthropic are not competitors to IT firms. They become the platform. And platform companies capture disproportionate value. Should software companies worry? Yes, but not panic. Well, history shows that technology transitions reward those who adapt. When cloud computing rose, traditional hardware companies suffered. When mobile platforms emerged, desktop software companies scrambled. Today, AI is the next transition wave. Companies that integrate AI deeply into their service models may actually increase productivity and margins. Those that resist may face pressure. It's important to remember, stock markets react to narratives before numbers. Anthropic's revenue runs signals, enterprise validation of generative AI, rapid scalability, high-margin AI infrastructure economics that triggers investor reallocation. Capital moves where growth expectations rise, and right now, AI is where growth is concentrated. So is Anthropic AI a threat to software companies? Not in isolation, but it is a symbol of a deeper shift. A shift from code written by thousands to intelligence generated in seconds. A shift from manpower scaling to model scaling. The question is not whether AI will disrupt software. The question is who controls the intelligence layer of the future economy. And tonight, companies like Anthropic are making it clear that race has already started.
One AI company and